Welcome back. We have breaking news right now. Bank of America earnings are out. Here is what the numbers are. 48 cents a share versus an estimate of 45 cents a share. Revenue coming in at $21.8 billion. That versus an estimate of $21.9 billion. So revenue slightly below estimates, but earnings better than expected on Bank of America. As you see, the stock right now, as these numbers hit the tape, is down fractionally. Kevin Kelly, your thoughts on this report? Bank of America out.
Yeah, this is pretty consistent. I think a lot of analysts were anticipating this. If you take a look at Bank of America, they're the largest lender in Florida. They're the second largest lender in Texas. That's according to FDIC. They are so big in those states that they actually had mobile teller machines going to Florida. So I think you'll see a move of this stock when the earnings call actually happens and Brian Moynihan comes on and he talks about how it's going to impact them. One of the reasons why the revenue numbers is actually driving the stock is because they need to start redeploying more of their capital to shareholders to increase their return on equity. It's lower than all of their peers. So they've been trying to rebound. They've done well earlier this year, but the hurricanes have really thrown them off. And the next leg of growth for these big banks we're talking about is deregulation, because they've already hit the limit. Trading revenues have been down significantly. If you looked at the earnings yesterday, JP Morgan's trading revenue was down 27%. We're going to have to see what the read-through is on the trading revenue for Bank of America, but they actually need to really give good guidance when it comes to these hurricanes and what it'll do for their capital returns.
Brian Moynihan's talking about revenue being up 4%. Not a great. I mean, it's okay. Right?
Yeah.
We weren't expecting any great number here because we knew that loan demand has been slowing down across the banking sector. Isn't that one of the key components?
Yeah, and again, I want to go back to Jamie Dimon again, talking about economic growth and the tax reform plan. I think this is why he's talking about this so much. These banks need that boost in underlying economic growth because you see the loan demand slowing down. The lack of volatility in the market means they're not making money on trading, and that's what you see going on with Bank of America here. And so I think that's also why you're not seeing much of a reaction in the market, even to the earnings beat, because people are looking ahead and saying, where's the juice going to come from for banks over the next years unless we get tax reform and the deregulation, as you said, Kevin?
Yeah, and just looking at this, overall provisions for credit losses at the firm were up 15% to just shy of $1 billion. Yeah, so that's pretty significant. So you need to see that we actually do need tax reform and cuts to really help alleviate the consumer and get them to spending and tick up inflation, as well as this deregulation story playing out. So we'll have to see. As Lindsay pointed out, that these stocks, at least in the last month, broadly speaking, had run up ahead of earnings
going into
season.
These numbers, sure.
And yesterday, despite beats by JP Morgan and Citigroup, those stocks fell. And so you're seeing a bit of a pullback. So even if the news is okay or even pretty decent as it was yesterday, you're still seeing people take some profits. Yeah, I think the other thing you brought up, Brian Moynihan sees a 4% increase in revenues. You see him miss on the revenues on this. So can they deliver for next year? JP Morgan sees a 6% increase in revenues for next year. And that is with them taking their loan growth down, right? So their estimates for loan growth is shrinking. And so, but every bank is different. So we're talking about Bank of America right here. If you think about Morgan Stanley, they're more of a wealth center bank. You used to see Wells Fargo was more consumer banking. That actually has gone over into JP Morgan, and they've been taking market share from Wells Fargo. So every bank is cut differently. So it's hard to get a read through on every bank depending on their different revenue streams.
Well, this is really the leader in terms of mortgages. Bank of America is, as well as Wells Fargo, I guess. I want to bring in the director of bank and equity strategies at Vining Sparks right now. Marty Mosby is with us this morning. Marty, good to have you today. What is your reaction to what we're hearing this morning from Bank of America?
Well, I've been listening to your conversation, and what I would do is I'd say pump the brakes just a little bit here. What we have is the hurricane is going to take away with the economic disruption that some of these banks had. Like you said, they have some concentration in Florida and Texas. That caused business to come to a halt for almost a complete month.
That's true.
So for them to miss the little amount that they did on revenues and with what you have in capital markets, so think about that. Capital markets had about a 15% decline across the board when you talk about what you're seeing in fixed income. So that is also an earnings pressure. Beside that, what you have is you already have the deregulation with capital. We already got the CCAR announcements this year. Shares are going down 5 to 6%. With that, you only need 4 or 5% growth in revenues with no expense growth to create close to 10% double-digit growth year over year, which is what we're seeing in the banks right now.
Yeah, but what does this report tell you about the overall environment right now? I mean, when you look at B of A's fixed income revenue, down better than 20%, Marty. Fixed income really taking a major hit once again. Fixed income's been under a rock for several quarters now. Equity trading was up, but just by a fraction. And then there's loan growth. So what does all of that tell you about what's going on in the business today?
Well, that's on one hand. You have those pressures that are going on. And yes, fixed income is down. But we had kind of a head fake. We had rates go up early this year. Yield investors saw that and they said, wow, we're going to have rising interest rates. And then rates fell out from under them. And then they said, well, wait a second, we could have just bought that rate a month ago, 2 months ago. They're waiting for those rates to round up again. So that's what's causing fixed income. That is a temporary pressure that we're going through. Loan growth at this point is waiting for economic growth. That is the next phase. The phase they're in right now is rounding up interest rates. On average, while we haven't been there in a straight line, interest rates are up 50 basis points across the curve, higher than they were last year.
All right. Would you buy the stock right here, Marty? Would you buy Bank of America shares?
Yes, we would.
You would?
We would, yes. We have a market outperform on Bank of America here. Yes, we would.
Thank you, Marty. Marty Mosby joining us there.